125. So we're up nearly 2%. The market is very much weighing the outlook for rising demand. At a commodities conference sponsored by the FT, we had Glencore and Vitol Group both saying they expect further gains in the market. American Express is planning to allow employees to work from home for at least part of the week on a permanent basis. Most employees in the U.S. and the UK will ultimately work from home, or rather work from the office Tuesday and Thursday, through Thursday, I should say. They'll have the opportunity to work from home then on Monday and Friday. Right now, if you look at the foreign exchange, stronger dollar with the Bloomberg Dollar Spot Index rising 0.2%. We've got a weaker yen and a weaker offshore Chinese yuan as well. I'm Doug Krisner. That is your Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So TikTok, everyone, the policy-setting arm of the U.S. Federal Reserve. We're talking about the FOMC. They're kicking off their two-day meeting today. We are expecting some changes.
We are. But we don't know. We don't know. Yeah, projections. But, we're still waiting on headlines for tomorrow.
Exactly. So let's see what Stephen Skenke is expecting. He's Chief Economic Advisor at Kill Point, former U.S. Treasury and White House National Security Council staff member, based in Washington, D.C., and that's exactly where we find him on this Tuesday. How are you?
I'm great, thanks. It's always good to be back with you.
Well, it's great to have you here, Steve. So what are you expecting? We are, at least our economics team and others, are forecasting that dot plot, we're going to see some changes, and that we'll get some expectations of interest rate changes in 2023 versus after 2023.
I think that's a fair assessment. The indicators are positive generally, which gives the Fed confidence. But at the same time, it is in an excellent position to be able to do absolutely nothing and feel good about it at this meeting. The good employment number, the good jobs numbers for May and April were positive, but well below expectations.
Right.
The inflation number headline is a little bit of a surprise, but from April to May is down a little bit than what it was from March to April. And when you look at where the impact is and what are the subcategories that have the biggest change other than energy, it's things like used cars, rental car prices, whereas the food cost for people eating at home was up 0.7% year over year. Housing up 2.2% year over year. Medical care services up 1.5%. So not something that threatens to build inflationary expectations. And I think that's what the Fed sees here.
So it sounds like you are somebody who's not concerned about inflation being persistent. It sounds like you're somebody who thinks that the data is pointing to this being transitory.
Well, at this point, the biggest impact on pulling the index up has been in categories, say for energy, that are largely transitory. You can go to a number of the different categories when you look at what the BLS put out last Thursday, and really understand what it was that was going on, and that just provides confidence as to it not being something that's turning into a problem. Will the Fed revise its summary of economic projections, maybe to notch it up a little bit for the year? I doubt it, just because there's no reason for them to do that yet.
You don't think the dot plot, Steve, you don't think they'll change it at all?
Oh, I think they may change the dot plot a little bit, just because that's the nature of being together and trying to express some thought about what might be happening with the data that they're receiving. But we are still very much within that window of burning off 2020 COVID low base effects. And so they don't want to seem concerned, but they certainly want to seem aware.
That was brilliant. Still in the window of burning off COVID low base effects. I mean, that's the point. I mean, you just look at the labor market, right? And it's over 7 million jobs in the U.S. That we still have to get back to get us to the point of being at pre-pandemic levels. Look at it globally. I was looking at some numbers globally, and it's over 70 million, some 75 million jobs that are short of its pre-crisis path. So that's a big one, the labor market, Steve.
Well, and Carol, 3.5 million fewer workers in the labor force. People who just went out for a whole host of reasons, of course, but many of them related to COVID. Time to retire, felt greater exposure, not motivated by the wages that are being paid. You know, when the Fed looks at this, it wants to see wages rise. And before they call the labor market tight, they want to see that businesses are actually offering to pay higher wages, and still people are not coming.
So, let me ask you something, though, on wages, because Tim and I talk about this a lot. We've seen Chipotle and others. I mean, there are instances where wages are going up. Why is it that we are so dismissive of it? Is it because it's on the lower end of kind of the wage scale?
I think that's part of it.
Okay.
You know, when we look at what people in the, I'll just call it broadly, hospitality, restaurants, lodging, people who interact with the public in some way or another, they traditionally have been paid lower wages and well below the $15 an hour. And now as there's been pressure and publicity about several of the big companies saying, well, we're going to pay people $15 an hour. We're just going to step it up and do that. These other folks say, well, now, wait a minute. I'm not getting $15 an hour, and I'm really on the front line being exposed where this virus still tracks. And I'm just not interested. I'll do something else. I'll wait out my unemployment benefits until they fully run out. And that can happen really without causing alarm when you look at it from the Fed's perspective. But when you sort of just read the headline numbers, of course, that attracts a lot of attention. And that's the sort of thing that will generate some interest and maybe some adjustments to the dot plot.
Stephen, just in 10 seconds, what's the piece of data that worries you that says that inflation's not transitory?
That we continue to see increases in some of the basic core areas.
Okay. The basic core areas. Dr. Stephen Skanke, Chief Economic Advisor at Keel Point, also former U.S. Treasury and White House National Security Council staff member. Always great when he joins us. Thanks so much, Steve.
Yeah, Steve, I feel like I'm teed up now for the Fed meeting. All right, let's get to world and national news for that. Let's head to D.C. and Nancy Lyons. Hey, Nance.
Hey, Carol. The Biden administration today unveiled steps for federal and local officials to battle national security threats posed by white supremacists and militia groups. It's part of a nationwide strategy to combat domestic terrorism. Attorney General Merrick Garland.
The only way to find sustainable solutions is not only to disrupt and deter, but also to address the root causes of violence.
Garland says all available government tools will be deployed to deal with an evolving and heightened threat. He cited the January 6th attack on the Capitol and called the follow-up investigation an enormous task. He noted hundreds of suspects are dealing with criminal prosecutions in connection with that assault. Independence Day is taking on a whole new meaning this year, as Bloomberg's Ann Cates reports.
President Joe Biden wants to imbue the holiday with new meaning by encouraging nationwide celebrations to mark the country's effective return to normalcy after 16 months of coronavirus pandemic disruption. The White House is expressing growing certainty that July 4th will serve as a breakthrough moment in the nation's recovery. The National Mall in Washington will host the traditional fireworks ceremony, and other communities are being encouraged to hold festivities as well. In Washington, Ann Cates, Bloomberg Radio.
California has lifted most of its coronavirus-related restrictions today. As cases and hospitalizations steadily drop, the state is putting an end to most of its restrictions on capacity and social distancing. Businesses are now able to return to usual operations, and fully vaccinated people can go maskless in most settings. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. Nancy Lyons in our DC bureau. So a story by Dow Jones, Wall Street Journal out, and it talks about a Chinese software developer trawling Alibaba's popular Taobao, am I saying it correctly? Taobao shopping website for 8 months, clandestinely collecting more than 1.1 billion pieces of user information before Alibaba noticed the scraping. This is according to a Chinese court verdict.
Yeah, Dow Jones story by Yang Ji and Liza Lin. The software developer began using web crawling software he designed on Taobao's site starting back in November of 2019, gathering information including user IDs, mobile phone numbers, and customer comments. That's according to a verdict released this month by a district court in China's central Henan province, and this according to Dow Jones.
Yeah, exactly. And so what's interesting is, listen, we're this whole idea of data, information, privacy, this is a bigger global issue. And it is interesting about, when something happens, whether the site, what they know and what they share with users.
Right. And look, the story points out that the developer didn't get any passwords or encrypted information in the data that he scraped. But at the same time, the data leak, according to Chinese legal experts, Dow Jones reports, involving mobile phone numbers, it would have more far-reaching consequences in China than other parts of the world, because in China, people are required to register with real name identification before obtaining a mobile phone number. Such numbers are considered by law to be personal information. That's according to a Beijing-based lawyer at the Gen law firm, quoted by Dow Jones.
And listen, consumer data leaks have become pretty commonplace in China in recent years. The country's data security regulations struggling to catch up with its technology advancements. Again, I'm reading from this Dow Jones story. We've heard this story before, and apparently Alibaba, they did say that the company proactively discovered and addressed the incident and was working with law enforcement to protect its users. They did not elaborate, though, on how many people were affected, but this is a huge site. About 925 million people use Alibaba's Chinese retail platforms at least once a month, according to the company.
A good reminder that no matter where you are, what you do online is likely seen by other people.
It's our new world order, that's for sure. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Less than 43 minutes until the closing bell. The tone in markets a little cautious as the Fed kicks off its two-day policy meeting. Let's get you the latest now on the price action. We'll cross to the Bloomberg Macro Squawk Desk and Bill Maloney. Hey, Bill.
And good afternoon, Doug. U.S. stocks are lower today in a quiet tape. Dow's currently down 77 points. S&P's dropped 5. NASDAQ is lower by 99. The U.S. 10-year yield at 1.5%. Gold is down 9. Small caps rise 3. And among the main 11 S&P sectors, leaders were energy and utilities. Real estate and tech were under pressure. Leaders to the upside in the Dow, Chevron, American Express, and Travelers, while Salesforce, JP Morgan, and Disney led to the downside. And in other news, Romney was very optimistic on a bipartisan infrastructure plan. Cuomo lifts the New York pandemic limits with the 70% vaccine benchmark met, and DraftKings fell 12% on the open. After a short call by Hindenburg Research, it has pared losses to 3.6%. Wrapping things up, Oracle reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, Bill, thank you. And live audio updates right on the Bloomberg terminal through the trading day at SQUA, then the green go key. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening to Bloomberg Business Week. Carol Master, Tim Stanovic in our Interactive Brokers studio. Apple, Tim, back in the spotlight.
It certainly isn't, not necessarily for a good reason. Apple subpoenas from the Trump era renew Washington's harsh glare. Anna Edgerton is tech lobbying reporter for Bloomberg News. She joins us on the phone from Washington, D.C. Anna, bring us up to speed. What exactly did the Trump administration demand Apple turn over?
So the Trump administration asked for information for about 100 individuals, 2 of whom were members of Congress, including some members of their family and staff members of the House Intelligence Committee. This was purportedly to search for the source of leaks to members of the press. But, it's a pretty shocking use of the power of the Justice Department to target members of Congress in this way.
So what's the end game and what are potentially the implications for Apple, which for a long time has been able to, Anna, it feels like, stay away from the glare that's been on a lot of other big tech companies?
Yeah, definitely. And this is something we're kind of looking at as a kind of a pattern of problems facing tech companies, and now kind of bring Apple into that group of companies that Washington policymakers are looking at. When it comes to how tax policy works, or how the legal system works, or how our public discourse works, these questions take on a whole different level of intensity when you look at the information these technology companies have. I mean, the amount of user data that Apple has just in the metadata of the call logs and text messages exchanged, that is a huge trove of data for the Justice Department to be able to obtain with just a subpoena, which used to be something for bank records.
Right. But Apple didn't have a choice, right?
Right, and that puts these companies in a really difficult position. They have to comply with the law. And one troubling thing about this case was that they also received a gag order, which means that they couldn't tell their users that they were the targets of this investigation.
So one of the sources that you spoke to for your story said that even turning over the time, date, and the length of the calls and texts, not necessarily the contents of those texts, can actually reveal critical information about a user's activity. What could law enforcement agents find with this information?
Yeah, I mean, we use our cell phones so much differently than the way we used to use landline phones. I mean, with a landline phone, you make a call and, maybe someone calls you back, but it's a much more kind of stop and go interaction. Whereas with the cell phone call log, you can see, which calls went out when. They have a much more frequency, and you can see the text messages going out at the same time. So, he used the example of making inferences about contacting a marital counselor or an abortion provider. There are a lot of things that you can glean from someone's call logs, even if you don't have the content of those calls.
So what do we need to understand? I mean, I'm kind of an all-in house when it comes to Apple. And it's funny, Anna, I don't know if you saw recently, there was an ad that Apple has put out, and it's an individual buying a coffee, and then all of a sudden these people are following him, and he's looking up stuff at his home, and the crowd gets bigger and bigger. This whole idea of when you search and use your phone or your device, that all of a sudden there's a lot of information that people can track. And then it ends with Apple, and it's showing their logo with a little lock key to the point of saying, we keep your information, secure. So it's interesting, I feel like, the public persona to some extent versus maybe what we're seeing in reality. So I guess I want to know, what do I need to understand as somebody who is an avid consumer of Apple products?
I mean, that's an excellent point. Apple has positioned itself as a privacy champion in this space. So the fact that even Apple's records of user data would be subject to subpoena, and these were subpoenas for people who were not targets of the investigation. They were judged to be merely relevant to the investigation. So the privacy experts I spoke with said that this is an extremely low bar to force these companies to hand over this information. They're pushing for much stronger regulation from Congress to put limits on what law enforcement can get, even from a company like Apple that prides itself on privacy.
Well, it's not just Apple that got these requests, or subpoenas, I should say. Microsoft confirmed it got them. Alphabet confirmed that it got them. It didn't answer a question, or I should say, you report that it didn't answer a question about whether it was subpoenaed in this case, but a spokesman pointed to the company's policy for responding to government requests for user information, which says the company often tries to narrow the request and occasionally resists providing any information. Give us the backdrop that this comes against with the way that tech companies are under scrutiny in Washington.
Yeah, this is, I spoke with representatives for Google and Microsoft, and although Microsoft confirmed that it got the subpoenas, we didn't get that confirmation from Google, but they're all being, most of these companies are being looped into these really serious policy discussions. And like I said, this has implications for what's accessible to law enforcement, the level of privacy that Americans can expect. And this has constitutional implications. One of the experts I spoke with said that your information on your cell phone, even the metadata, should be protected by the Fourth Amendment of the Constitution against searches and seizures. So, there's a lot of questions facing society right now about how we use technology and what kind of limits should be put on how that is kind of integrated into our daily lives.
Especially a device that, exactly, is integrated into our lives in so many ways. I mean, bank records, it's certain information we know in past what we used to put there, or phone records, it's just conversations. But cell phones and any of these electronic devices take data and our information, our personal information, to a whole other level. Anna, thanks for getting us up to speed on this. Anna Edgerton, she is tech lobbying reporter at Bloomberg News, on the phone from Washington, D.C. What are you thinking?
Well, I'm thinking of just when it comes to metadata, what someone can actually find out about you, given length of phone calls, who you're actually calling. Everything. It doesn't matter if they can't actually listen to your conversations.
As you walk around and tracking, they know.
Oh, yeah. It's like the best tracking device that exists.
That's our
world. Cell phone, I should say.
That is our world. All right, you're listening to Bloomberg Business Week. Coming up, the chart of the day, right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week.
And it's time for
Dun, 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 dun.
Song of the Day.
And Chart of the Day.
We're also going to learn the stock of the day.
Yes, we are. Oh, that's right. It's like 3 for 1.
And Dave Wilson's with us in the Interactive Broker Studios in New York.
Can I just say for you folks on radio, those on YouTube can see Dave. I mean, really so nicely coordinated today. You're looking rather dashing.
Is it blue on blue?
It's like my favorite color, blue. All right, we're going to get to Dave in just a moment. Enough. I think he's blushing. He's blushing. Let's get a check on your top business stories. Another check on that trading day. Doug Krisner. Doug, you never blush.
I never blush. We've got about 28 minutes until the closing bell, Carol. The tone continues to be cautious in trading, not just in equities, but in the bond market as well. We have the Fed kicking off its 2-day policy meeting. By the way, we'll have special coverage of the decision tomorrow at 2 p.m. here on Bloomberg Radio. Now, the day's economic news really illustrates the growing pains for the economy. Retail sales down in May by 1.3%. It's an indication, if you look beneath the headlines, that consumers may be shifting more of their spending to services and away from goods. And then, in terms of wholesale inflation, producer prices were up more than expected in the month of May. If you look at the S&P 500, we are down right now from a record high by nearly 0.3%. It's real estate, it's information technology leading the decline. NASDAQ comp also down from an all-time high with a loss of about 0.8%. And where the Dow is concerned, minus 0.3%. Heavily traded right now, shares in Freeport-McMoRan. Stock is down more than 4%. Copper prices now at the lowest level in nearly 2 months, and that's big drag on the Freeport-McMoRan shares. And DraftKings moving lower. This is after the short seller Hindenburg Research said it was betting against the online gaming company. 10-year Treasury yielding just under 1.5%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
You sure you don't blush?
I don't. You're going to try to make me?
I am. I'm working on it.
Don't. I'll blush.
I'm working on it, Krisner.
Thank you, Doug Krisner. This is Bloomberg.
Are you curious? Can she sing?
Kinda.
Oh, okay.
She sang the choruses.
That's a masser, kinda.
And Jackson Brown helped out the big man on the verses.
He did.
Yeah.
Jackson Brown. That's a classic one. So Running on Empty.
I thought.
Are you talking energy?
I thought there's a Run Into the Bulls reference in this chart. And
right.
So I thought it was. I was thinking, okay, Rage Against the Machine, Bulls on Parade. I'm ready for it.
Well, that would have been a choice now, wouldn't it?
Yeah.
Wasn't my choice, but
Did you see the skies went dark all of a sudden?
It makes sense.
You know, and that's the thing. You got to wonder if the skies are going dark in the options market. So what we're talking about here are U.S. equity and index options. And Julian Emanuel, who's the head of equity and derivatives strategy at BTIG, was pointing out what's going on with a put-call ratio. So in other words, put options, you know, they lock in prices in case you want to sell. Call options, I mean, they go up along with the stocks or the indexes. So, this is an indicator of sentiment. And he particularly looked at a 10-day moving average, to kind of smooth out the fluctuations from day to day. And when you take a look at that on the Bloomberg terminal, you find out that it's become more or less a one-sided market for options. The ratio is the lowest it's been since July 2000, which if you stood it on its head, you could basically say there's a whole lot of optimism being reflected in the options market.
Call options and put.
Absolutely.
Got it.
That's the point. And, you think about the amateur traders out there on Robinhood or whatever their favorite app is, and, they're buying options in a lot of cases as opposed to buying the underlying stock. So that's reflected in this comparison. So when you put it all together, at least for Emmanuel, well, he puts it this way, it's a rather understated conclusion. Bullish sentiment may have become extended.
So there's too much bullish sentiment, too much optimism in the market, and that always makes people nervous.
Absolutely. You got that right. And if it makes you nervous, or even if you just want to see the chart, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So it's not necessarily a sign that people are optimistic. I mean, I look at the chart and I see that, it's gone over 1.2%, but 2 times in the last 21 years. It's approached 1.2% twice in the last 20 years. One was during the COVID crisis and the sell-off that we saw in March of last year.
Well, exactly, when people were pessimistic and put options were in vogue. But what's happened is that's completely been transformed over the past 15 months. And considering we've had a bull market over that time, you can sort of understand why. It's reflected not just in what's happening to share prices, but also what's happening with options trading. And that's the point. I mean, it's an indicator, of sentiment kind of going one way, and it's, figuring shares are going to rise, and when things go one way, they have a bad habit of eventually going the other way.
Which is why when it spiked in terms of the put options, yes, it was incredibly negative. We had the sell-off, but it was also a great indicator that there was too much negativity in the market. And as a result, we did see the ultimate bounce back for a lot of reasons. It made sense, but it does play out that way.
Exactly. And I got a stock for you that could definitely use a bounce back after today.
What's that?
It's Sage Therapeutics. The ticker is its first name, Sage, S-A-G-E. Now, they came out with study results on a depression drug that they've been working with Biogen on. You remember that name. Last week it was all about Alzheimer's. Today it's about depression. Well, the study results showed that the drug met the main goal, or the primary endpoint, as they say. Problem is, analysts were not impressed with how the results looked. They raised questions, at least according to our reporting, on the durability and commercial potential of the treatment. In other words, it didn't look as good as analysts were anticipating going into the results. And so you've got Sage now down 19%. Headed for its biggest drop since March of last year.
Listen, it's a market where there are so many different drugs out there, and unless you can show that you are better, the transformative potential that there's something better that you offer versus something that's out there, it's going to be probably a hard sell, right?
Yeah, absolutely. And depression, like Alzheimer's, certainly drug makers have had their misfires as they've tried to develop treatments, and so the question becomes, what's the prospect for this one, really? And analysts are concerned that it's not as good as it looked.
Yeah.
You can look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter @TheOneDave. Dave, what were some other songs you were considering for today? Or did you just know you were going to do?
No, I just kind of pulled it out of the hat to some extent. I was considering Fighting on the Same Side by the Hooters.
Oh. I wouldn't have gotten that one.
We wouldn't.
No,
have
you
gotten that
wouldn't.
one. I definitely wouldn't have.
Philly band back in the 80s,
All right, Dave Wilson, thank you so much.
Let's get a check of world and national news with Nancy Lyons in the 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim, White House officials are telling Democrats they'll give Senate Democrats and Republicans about a week or 10 days more to try to put together a bipartisan infrastructure deal. If that doesn't work out, Democrats would pursue something unilaterally. Republican Senator Bill Cassidy is working on reaching a compromise quickly.
There's still some things that are left up in the air. It's not written in stone, but it's enough that both Democrats and Republicans, as part of the group, are taking it to our colleagues to see if they can be interested as well.
Cassidy says there's a lot in the package that's paid for, which he says is a good thing. But Democratic Senator Ron Wyden says most of what's being discussed would heap new taxes on working people, and he says it's time for the wealthy to pay their fair share. A House committee wants former White House Chief of Staff Mark Meadows to testify about whether the former president pressured the Department of Justice to overturn the 2020 election.
Democrats on the Oversight and Reform Committee assert the documents they've obtained illustrate how former President Trump, Meadows, and others repeatedly pressed senior DOJ officials to spread unsubstantiated allegations of voter fraud. They contend these documents also show that the former president used White House channels and a private attorney to pressure the Department of Justice to file a Supreme Court lawsuit to nullify the election. In Washington, I'm Amy Morris, Bloomberg Radio.
Senator Amy Klobuchar announced at a hearing today President Biden has named Lena Khan chair of the Federal Trade Commission. She's an advocate of aggressive antitrust enforcement against U.S. tech giants. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. So let's get to a story. Tim, actually, we were on our 1:30 kind of final planning call.
This was the 10 a.m. call, Carol?
Oh, sorry.
Sorry? We have several planning calls.
It's that kind of week already.
It is, and the Fed hasn't even come out with this decision yet.
Oh, help me, world. So Mackenzie Scott, she is the billionaire philanthropist, former wife of Jeff Bezos. She has made a big gift.
Yeah, $2.7 billion to a variety of charities. She wrote in a blog post on Tuesday. That brings her total donations since her first giving spree, which was not even a year ago. It was in July of 2020, to $8.5 billion.
She has shaken up the world. Man, she's doing it differently. Typically, and I think we've written about this and reported that, somebody who is wealthy sets up foundations and, an organization and an infrastructure and then start giving it out. And she just is like, here. Yeah, she's just giving it out.
She's shaking it up. She's 51 years old, and she shook up the philanthropy world last year with the pace and magnitude of her giving. So this time, Carol, she gave to 286 organizations. They range from the Alvin Ailey American Dance Theater to racial equity funds in philanthropy and in journalism. It's her first time announcing donations since she remarried to Dan Jewett, a Seattle science teacher.
Yeah, when they divorced, she ended up with a 4% stake in Amazon.com. She's worth almost $60 billion. That's even after her rapid giving. That's already made her one of the most consequential philanthropists in the world. The rapidity, the speed at which she has done things is striking.
I think part of it also has to do with, going public about this, talking about the organizations, talking about her goals there, has to do with the idea that she wants to inspire others to think about these organizations and also go with her own philosophy of the way that she wants to give.
Right, exactly, and just kind of do it. And she certainly is. So it's been pretty wild to kind of watch her do it and do it so quickly. As we said, it's been in a year or so?
Yeah, not even a year.
Roughly.
July of 2020 was when she gave her first big donation.
Yeah, and these donations, especially some of these smaller groups, perhaps get kind of forgotten.
Exactly.
In the giving world, and so she's definitely singling them out. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We're under 13 minutes from the closing bell. Tuesday session. Weaker stocks. The tone in markets really cautious today as the Fed kicks off its two-day policy meeting. The day's economic data really illustrates the challenges for the American recovery. Retail sales down last month by 1.3%. It seems like consumers are shifting more of their spending to services and away from goods. If you look under the hood, so to speak, sales of autos and auto parts along with building materials down anywhere from 3.5% to 5%. Maybe for that reason, some analysts are saying this is an example of transitory inflation. Now, on the other hand, we had producer prices up more than expected in the month of May, gaining 0.8% from the prior month. We've got a 10-year Treasury just under 1.5%. The equity market slipping from all-time highs. That's where the S&P and the NASDAQ comp are concerned. The S&P right now down about 0.1%. NASDAQ comp weaker by 0.7%. And we've got the Dow off about 0.2%. American Express is reporting card member loans in May jumped by 5%. Now, that compares to numbers seen in April. At the same time, AXP saying the delinquency rate has fallen to the lowest level since Bloomberg began tracking this data back in December 2008. And crude oil right now above 72 the barrel. Very, very positive outlook for rising demand coming out of the commodities conference today, sponsored by the FT. I'm Doug Krisner, and that is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10.5 minutes left in today's trading session. We're bouncing around a little bit here on this Tuesday. Let's get to it with Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. He is on the phone from Waltham, Massachusetts. Approximately $232.5 billion in assets under management. Brad, good to have you back with us. What's on your radar today?
Well, just watching the recovery continue. There's a lot of headlines. There's a lot of scary things. And right now, I think the Fed is going to be the next data point to drop.
What are you expecting with that data point? And what are you watching for tomorrow?
I think they're going to do nothing. And I think that for a couple of reasons. First of all, inflation is not going to be a problem. Yeah, we got headlines, but they'll pass. Employment is still a problem. And they've said that's what they're focused on. So A, they have no reason to. B, they have no reason to. They'll hold tight.
Well, it's what we just talked about. There's still more than 7 million Americans out of work. If you take the global snapshot, there are more than 70 million folks around the world that are out of work. And so that is, to some extent, an insurance policy that when it comes to monetary policy and policy overall, it's going to be stimulative and easy until we see those numbers correct, or at least get closer.
I think that's exactly right, Carol. And, I think one of the things out there is there's this huge problem, and it's this disconnect with the labor market. There's a labor shortage. What's interesting is if you go and you look at the number of people who are out of the labor force but who want to get a job, that pretty much fills that labor gap. So we know it's going to happen, but we also know it's going to take some time. And that's what the Fed is watching. How long is it going to take?
Brad, what changes your mind? You say that, inflation is not going to be a problem. Employment is still a problem. What changes your mind and says that inflation is a problem? What's that data point?
I think it's nothing but time. I mean, right now, if you look at the 2-year numbers as opposed to the 1-year numbers, we're still within the range. The 1-year numbers are the bounce back up, and we're forgetting about the drop down during the early part of the pandemic. Now, if that stays up, once the year-on-year comparisons start to normalize, that says we got a bigger problem. But right now, it doesn't look like that's going to happen. Some of the higher frequency stuff, lumber, for example, is already starting to roll over, and we're going to see that with most of the other stuff as well.
Right, lumber, copper, we've seen that as well, and those are the kind of metrics that you really follow in terms of inflationary pressures, because they can often be, if they tend to stick, that's when you start to get a little bit nervous. So in this environment then, what do you advise investors to do? I mean, it's hard to kind of beat the U.S. equity market, but having said that, we are seeing ETF flows increasingly. We've seen money flowing into European ETFs versus U.S. ETFs because the U.S. prices and valuations have gotten a little bit lofty.
U.S. valuations, if you look at it, are actually down a little bit on a forward earnings basis. Now, they're still not cheap, don't get me wrong, but they pretty much held around 22, and now they're about 21 or thereabouts because earnings are growing faster than expected. And there's probably still some upside there. So I like emerging markets. I think they're going to catch up with us at some point. I like U.S. markets. Developed foreign markets, not so much.
Yeah, specifically, what are you referring to? I mean, can you be more specific with those markets that you're excited about?
I like the U.S. I like India. India has had a terrible experience with the pandemic, but they, just like the United States, they're a democracy. They will get through this. They'll have some resilience. So I think there's some opportunities there. I think if you look at some of the Southeast Asian economies, there are chances, they are still going through the pandemic, but again, they supply the United States. So they're going to have a demand-driven push once they get through the pandemic. Again, that's not going to happen immediately, but anybody who's in a position to benefit from the U.S. reopening, once they get their own house in order, is going to do very well.
Hey, what about consumer discretionary? My understanding is that is an area that you like specifically, some confidence and disposable income that's out there. Having said that, the retail sales numbers today, we did see a shift out of some of the things that people have been buying, like things for their home and the auto sector. So where within consumer discretionary, Brad, do you find opportunity?
I think you're going to find a lot of people as they move back into the workforce, and I mentioned all of the people who are out of the workforce who are coming back, are going to be going for small luxuries. I think companies that cater to, the average person are going to do very well. I think companies that cater to the average shopper who's going to be coming back, who's going to have some discretionary income, are going to do very well. I think Main Street America retail is going to do very well.
Main Street retail, because it's interesting. Someone was telling me anecdotally, being at a mall in a northern New Jersey suburb, and said the lines were just out of the boutiques, like the Chanel boutique and the high-end luxury. Is high-end luxury something on your buying list as well?
Yeah, I think when I talk about Main Street, I think I'm talking about the average person, which would include malls.
Yeah.
So I think that's the average person has been sitting at home. They still have a lot of money set aside, and they want to go spend it, and they want to go have a good time. And part of that is shopping as an experience.
When you say experience, I mean, are you thinking more about moving away from what we've had over the last 16 months and the idea that we've gotten so used to shopping online and going back to what we were seeing before the pandemic when retailers and other stores were trying to create experiences that you couldn't get online? You think Americans are going to go back to that?
I do think that there's a reason to go back to that. In fact, I think they have to go back to that, because if you can buy anything easily, why wouldn't you buy it online? So, for example, if Walmart is competing against Amazon, what can Walmart offer that Amazon can't? Now, you might say that's not necessarily an experience, but it is an experience to go out to a shop. If you look at Target, same thing. What can they offer specifically that Amazon can't? And then, of course, at the high end, you have the high-end retailers. But you can create that experience at all levels, and I think increasingly you're seeing all retailers try and make that happen.
So one place you would not want to be as an investor right now?
One place I would not want to be as an investor right now.
Putting you on the hot seat there, Brad.
No, I think it's a great question. I think I would say some of the, I would probably say crypto. There's been a lot of volatility out there. There's been a lot of, it's basically a story asset. And my question is, how much more good news can go out there? I mean, I'm just not sure I see the upside from here, from a sentiment point of view. I'm not sure where I see the marginal buyer.
All right, we're going to leave it on that note. That's good to know and great to get your perspective. Brad McMillan, Chief Investment Officer at Commonwealth Financial Network, joining us on the phone from Waltham, Massachusetts. They've got roughly $232.5 billion in assets under management. All right, just a few minutes left in the trading session. We've been bouncing around here. We're definitely off our best levels of the day. Still down about 9 on the S&P. Dow down about 95 points. NASDAQ off more than 100. Doesn't look like we're going to see another record when it comes to the broader market. And we've certainly seen that. All right, coming up, folks, we're going to go beyond the bell with our Bloomberg TV team and on YouTube, counting you down to the closing bell on this Tuesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to that closing bell. Here to help take us beyond the bell, our global simulcast team. Carol Master, Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse the crucial moments of the trading day. Carol, what do you make of today?
I'm parsing away for you, Romaine. What's interesting is I feel like there is incredible calm in the markets. Here we've kicked off that 2-day Fed meeting. We'll get the decision tomorrow. We got some mixed economic news, some disappointment on the retail front, some hotter numbers on the inflation front, but it seems like we're taking in stride. Let's remember, the Fed's going to watch employment. We've got millions of jobs to get back before we get back to normal. And so it feels like the Fed's got a lot of breathing room. And also, Tim, we know the Fed's not going to do, pull the ripcord when it comes to policy changes.
They've been very clear about telegraphing what they want to do. Look, dare we say calm before the storm? Who knows? Certainly calm today. Investors
storm?
We don't know.
I just
Who
said
knows?
we're calm.
Calm before the storm.
All right.
We don't know what we're going to see tomorrow. But look, taking a deeper dive into the S&P 500 today, it's all about energy. And Caroline, I do not want to step on your toes, but just look at the energy sector, higher by more than 2.1% today. A lot of that, of course, has to do with oil prices. But energy's still a top performer, Taylor, this year when it comes to the 11 major industry groups.
And Caroline, I mean, we just had a great conversation with Richard Bernstein of Richard Bernstein Advisors, really talking about some of those big inflationary trends that, the market is not paying attention to. It is the PPI numbers this morning. Of course, we've been focused so much on retail sales. PPI shows that if inflationary pressures are here.
Oil above 70, but copper coming down.
All right, well, taking a look here at the equity markets, 42.45 and change here on the S&P 500, down about 0.2%, of course, coming off yesterday's record high. Similar story for the NASDAQ, which, of course, closed at a record high yesterday, giving back all of those gains from yesterday, down about 0.7%, 14,072. The Dow Jones Industrial Average right around 34,300. That's down about 0.3%. And the Russell 2000 also down about 0.3% on the day, closing here, looking for final settlement here. Looks like it's going to be right around 2,320.
And a little bit more of a risk-on trade here. If I look at the S&P 500, 274 names in the index higher today, 228 lower. So, almost an even split, but with a little bit of a bullish tone there, Tim.
And I give you a little bit of hint of some of these inflationary trends. We just, again, came off that great conversation with Richard Bernstein, talking about energy for our radio audience on a sector level. You're taking a look at energy that's up 1.8%. You talk about negative $40 a barrel that goes to 72. Maybe that number goes to 80, $90 a barrel. Every other sort of inflationary, transportation, capital goods, utilities, bond proxies, those are the leaders up at least 0.4%. You go to the bottom and it's really technology that's bearing the brunt of today's sell-off despite stable to falling yields. It's automakers, it's semiconductors, it's media, it's software services, technology not in vogue today, Carol.
All right, guys, and I am going a little bit old school when it comes to gainers today. Tim talked earlier about the energy moves, and we're certainly seeing outperformers there. ExxonMobil up about 3.7%, top name in the S&P 500. Credit Suisse coming out and saying Exxon's refining segment underappreciated. So that certainly gave some juice to that stock. Synchrony Financial, those credit cards that we're using as we kind of move back to stores. We did have the CFO coming out commenting at a virtual conference saying that they have not loosened credit standards. They're saying they're doing their credit line increases for current users. So we did see that stock moving up as well in today's session. You can see up about just shy of 3%. It's been on a run this year, up more than 40%. meme stocks. Just got to mention AMC today. It's up again, nearly up 2,800% so far this year. And you can see AMC, let me just pull it up on my Bloomberg. It is up again, as you can see, in today's trade. And then one last name, Del Taco Restaurants. I'm not going to call it a meme stock, but it's definitely getting some love among the Reddit community. It's the home of the Honey Mango Taco and Choco Days. Just want to put that out. Nonetheless, this stock has been on a little bit of a run. Ticker is Taco, up 2% here, Tim.
Maybe not a meme stock, but certainly a lunch stock. You got the gainers, I got the decliners, Carol. Let's talk Citi, because some big moves late in the day, finishing the day down more than 1.7%. Shares turning negative late in the day, erasing earlier gains after CFO Mark Mason said trading revenue in the second quarter is likely to be down by a percentage in the low 30s. Also says investment banking revenue is down by mid to high single digits. Citi shares have gained more than 20% this year.
Yeah, and Tim,
go ahead.
And this was a remarkable drop here. I mean, we saw this really sell off in the final things, and we were just talking a little bit earlier about J.P. Morgan on the comments out of Jamie Dimon and the idea that trading revenue there, that people should get their expectations down a little bit. So you wonder if some of these big banks now are finally starting to guide people maybe to, I guess, a little bit more of a normal growth for some of these banks.
Yeah, it's a good question, especially in the context of yesterday's comments from Jamie Dimon. I do want to go through DraftKings finishing the day down more than 4.7%, Sage Therapeutics down more than 19.3%, and Petco finishing the day down more than 9.4%. Caroline, take it away.
Yeah, woof.
Woof is right. Yeah, that's the ticker. That's a fun ticker.
You gotta love a ticker. Taco tickers, woof tickers. What more would you want? Meanwhile, let's go cross-asset team, because I'm looking at a story of oil prices going higher. The dollar also though pushing higher today. As we go across asset on our global macro movers for our radio audience, I'm looking at, interestingly, FX story being that of a US dollar strength ahead of the Federal Reserve, and therefore actually the Canadian dollar falling 0.3%, commodity-related currencies down, Aussie dollar off by 0.4%, the Kiwi also off by 0.3%. This perhaps more feeding into the story of copper coming off of its highs, a pullback there. Maybe, though, we should train our eyes towards what oil is up to. The highest since 2018, Brent crude 1.8% higher, $74 is where we settled at. WTI crude up 2% as well. The story of demand still fueling oil higher, and many in the market think that oil could push to even further highs. That is inflationary pressure ahead of the Fed. Sovereign bonds, though, a story of yields rising higher in Europe. We had Europe at record highs in the stock market, Taylor.
Yeah, well, we talk about yields, and unfortunately, Romaine wins. We are pretty much unch on the day, going nowhere. Of course, it is the calm before we get any headlines about the Federal Reserve tomorrow.
Are you expecting a storm too?
I am not.
Tim has predicted a storm.
What have I done?
Calm.
As, you know, the 10 years remained under 150 now since June 8. So you're going back about a week or so where we're not even above 150 at all.
Snooze.
We talk about a really strong 20-year bond auction coming off of a really strong 3s and 10s last week. There is this hint of loving long duration assets, you guys, whether it be bond yields out on the long end. And of course, this really pushes us forward to the Fed. We talk about some of the economic data, of course, that we're getting this morning, Romaine, with PPI. And it is a consumer that is willing to spend, and prices are rising.
And to Carol's point, too, about the calm, though, I mean, you kind of makes you wonder, like, what possibly could Jerome Powell say tomorrow that's really going to sort of move this market here? I mean, he has been relatively effective at communicating that the Fed isn't going to do anything anytime soon. And even if they do start to change some of their economic forecasts the dots, which we love here on this program, Carol, it's not likely to be anything overly dramatic.
I call it the scatter platter. Hey, let's go to Oracle's earnings, because the stock is up. We like to look at earnings, right? It gives us some insight into what's going on at corporate America. It's up about 0.5%. Fourth quarter adjusted revenue, $11.23 billion. So that looks like it's a little bit of a beat. $11.04 billion was the forecast. Also looking at the fourth quarter adjusted operating margin, 49%. That was smack on what the street was looking for. That's year over year. Fourth quarter adjusted EPS, $1.54. So that's 23 cents better than what the street was looking for. Cloud services, that's an important metric for this company. And license support revenue, $7.39 billion. This stock's been on a tear, Tim. So, you know, they've got to really outperform for investors to sit up and take notice.
Yeah, shares moving in after hours, trading just fractionally beyond between positive and negative territory. I want to talk retail sales, though, and the retail sales data that we got a little earlier today, Taylor, because they were lower than forecast. They contracted 1.3% from the month before. But if we think think about it to where the actual retail sales contracted, where they increased. Auto dealers and stores that sold furniture, electronics, and building materials all saw sizable declines. This tells me that as people are vaccinated, they're spending their money elsewhere. Taylor, it's not necessarily the stay-at-home shopping that they're doing, right? They're buying stuff at restaurants. They're buying services now.
It is the shift to services from goods. Romaine, one of my favorite comments was from the economists over at Breen Capital saying the U.S. consumer, they have income and they remain very willing to spend despite some of the pullbacks that we've seen in the stimulus checks.
Right.
Consumers are spending and the money is there.
The question is where they're spending, right? A lot of that is on food and drink. I know we've all seen Caroline's tab over at Bloom Tavern. I mean, she's definitely doing her part. But, I mean, the question is what happens when Caroline gets tired of drinking? I mean,
she says she doesn't know Margaritaville.
Is she going to go out and buy a new dress or a new car or something?
Am I not going to be buying perhaps my delivery food to my home? Blue Apron, remember? This is the way in which you get your, what you might have a more exciting dinner arrangement being sent to your home and ready to prepare. Blue Apron down by 7% in after hours. The reason, well, they're selling more shares, so they're dining out at the moment in terms of perhaps appetite for their shares, but perhaps not appetite for the Blue Apron boxes. I don't know whether we're all still trying to pimp up what we're eating at home.
There's a lot of money out there.
Everybody who thinks Caroline really does know about Margaritaville, raise their hand.
I know about the margarita bit, just not the bill bit.
All right, guys, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and YouTube. We'll see you again, same time, same place tomorrow. It has been fun.
More markets coverage coming up right here.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I am watching Oracle in the after hours. It's down about 1.7%, kind of bouncing around here, down 1%, down 1.25%. They did beat, though, on the top and bottom line, but it's been a stock that's been on a tear. Fourth quarter seems to be important. I was looking at some of the analysis ahead of it releasing, but it'll be a name we'll be watching. Now down about 2% in the after hours.
Yeah, you're watching Oracle. I'm watching Blue Apron, the meal kit company, down by 9.6% in after hours trading. That after announcing a proposed offering of Class A stock just a few minutes ago.
It's a tough business, man. They spend a lot on marketing. It's competitive. I mean, you get bombarded. Like, it's cost to acquire and hold on to customers. It's not cheap.
Yeah, I was on the floor of the New York Stock Exchange when they went public a few years ago, priced at $10 a share. Then they did, they did the opposite of when you actually split the shares, right? And now it's trading at, $4.95.
Yeah, it's pretty remarkable. All right, I will see you tomorrow. Have a great evening.
Thank you. You too.
Look forward to it. All right, let's get to World and National News, and let's get to Nancy Lyons in our 991 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. President Biden will be meeting with Russian President Vladimir Putin in Geneva tomorrow. The two are expected to talk for up to 5 hours, with White House officials saying there will be just one aide and no food. The meeting caps off a European trip in which President Biden met with G7 members, NATO, and EU allies. Attorney General Merrick Garland is launching a new national strategy for countering domestic terrorism, stating people and groups that instigated the attack on the U.S. Capitol remain a continuing threat.
Garland said the hardest threat to deal with comes from individuals and small groups that use the internet to radicalize, can mobilize quietly, and they possess firearms.
Domestic violent extremists posed an elevated threat in 2021. The top domestic violent extremist threat comes from racially or ethnically motivated violent extremists, specifically those who advocated for the superiority of the white race.
Garland stressed that espousing a hateful ideology is not unlawful until it leads to planning or committing acts of violence. In Washington, Irv Chapman, Bloomberg Radio.
The Biden administration is distributing some of the money from the 2020 stimulus to underserved communities. Treasury Secretary Janet Yellen says it's time to build an economy that works for everyone.
Today, Treasury is awarding $1.25 billion to 863 community development financial institutions across the country.
Yellen says the money will go to help those who've been turned down for loans from the major banks. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Doug Krisner, of course, host of Bloomberg Daybreak Asia. And Doug, this story we've been wanting to get to. It is by our Charlie Wells and Ivan Livingston, and it's about as people are kind of told by workers, you can work wherever you want around the globe, but again, your company might be based in a certain state or a certain country. You need to think about maybe the tax consequences of it.
Absolutely. I mean, this is a complicated situation. You could be required to file multiple tax forms in different jurisdictions. What I think is fascinating about this story, Carol, is that many companies have recognized that this becomes a trend. It's also an opportunity, right? This remote working. If
totally.
you have to hire a firm to help keep up with the difference in tax law, maybe even help file, working with local accounting experts, maybe even taking some assessment of foreign exchange risk and trying to hedge that risk.
Or learning a foreign language.
Well, let's not even go there.
Because you have to. They talk about were you in Brazil, right? Having to do it in Portuguese.
I think also one of the interesting points is the Stanford University economics professor quoted in the story. I think his name was Nick Bloom. He was saying this is more than a gimmick. I think we've reached maybe a little bit of, I don't want to call it an inflection point necessarily, but I think it's a significant moment where we're going to see more kind of working from home or working from these locations that you would otherwise wouldn't find employees situated in.
Right. When it comes to employee perks, right, there are things like food courts or vacation or flex time or what have you. But this now potentially becomes, when you're hiring somebody, it could be a perk that certainly will appeal. We're going to actually talk about this a little bit later on, about what workers are looking for in terms of where they work and when they work and how they work. But this could be kind of a big deal on the perk list.
Definitely. And there was one quote I think that's also very important to tease out in this piece. A lot of times you hear this myth that if I don't spend 180 days in a country, I'm good. It's not true.
This is why the tax accountants are important. All right, thanks.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Shares in Oracle bouncing around in the late session. The stock right now is minus 1.5%. The company did report fourth quarter adjusted revenue above estimates. More on that story, and we'll have it shortly here on Bloomberg Business Week. Equities drifted lower. The Fed obviously kicking off its two-day meeting. We'll have special coverage for you on the decision tomorrow, 2 p.m. Wall Street time. Today, the economic news kind of was a good illustration of the challenges for the American economy. We had retail sales down last month by 1.3%. It could be a sign that consumers are now pivoting more of their spending to services and away from goods. And at the same time, producer prices rose more than forecast in the month of May. 10-year Treasury, though, very little changed. We are under 1.5% in yield terms. And now in stock trading, we had the S&P and the NASDAQ comp each down from record highs. In the case of the S&P, minus 0.2%, NASDAQ comp lower by 0.7%. The Dow today fell by about 0.3%. But look at crude oil, WTI now in the extended session, 72.25. So we're up about 2%. We had a commodities conference today sponsored by the FT, and Glencore and Vitol Group both saying they see further gains in the oil market. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. And a headline crossing the Bloomberg: Platinum equity to buy McGraw-Hill from Apollo. That is coming from Dow Jones. So a little bit of deal flow on this Tuesday afternoon after the close. Well, we are still trying to understand and assess the pandemic's impact on our work world, physically in terms of how and where we work, as well as really our expectations of it. Let's get some insight from our next guest, Sheila Subramanian. She is Senior Director at Slack, where she leads the Future Forum, which is a research consortium and in-house think tank and consultancy backed by Slack. And she joins us on the phone in San Francisco. Sheila, great to have you here with us. How are you?
I'm doing great. Thank you for having me today, Carol.
Well, it's great to have you here. Tell us a little bit about some of the research and work that you've done, because we are really trying to assess what is our work world going forward, especially when throughout the pandemic, we were hearing a lot in terms of the conversation, the narrative of things have been turned upside down.
Mm-hmm. So we launched Future Forum last year to help companies thrive in this new digital-first world of work. And we're backed by Slack, but we also have partners like Herman Miller, Boston Consulting Group, and Management Leadership for Tomorrow to develop a well-rounded point of view of what work is going to look like. So we just launched some new research today that shows that after 15 months of working through the pandemic, we're seeing that knowledge workers are restless. More than half, 56%, are open to looking for a new job outside of their current company in the next year.
What else? So that's a lot. That's a lot. Or give us some perspective, because we like to look at economic data points like JOLTS, job openings. How confident do people feel about kind of leaving their existing job to go to another job, and that gives you some sign of how strong the economy is, or at least how strong workers feel in this labor market.
Yes, and right now flexibility is a core expectation for those employees. Employees ranked flexibility second, only to compensation when they are determining their job satisfaction. So they're looking and seeing what their leaders are saying about what the return to office policies are going to be, and they're looking to make a call once they better understand how flexible their work life can be. And I think it's important to note that flexibility is not just about coming into the office 2 to 3 times a week. It's not just about where people work, but when and how employees work are even more important to them. So based on our research of over 10,000 knowledge workers, 76% want flexibility in where they work, but a whopping 93% want flexibility in when they work. And they want to see their employers leading the way on that front.
Well, I want a lot too, but that doesn't mean I'm going to get it. So, I'm just curious what you're hearing on the flip side. I have been having a ton of conversations with individuals, heads of companies, and folks in the real estate world, who understand office space. There are a lot, and I understand some might say, well, they're talking their book, but they're also, they have shareholders they have to answer to, so they've got to be making the right decisions. They don't see the office dying anytime soon.
Yeah, and this data is not showing that the office is dying. It's really being intentional about the role of the office and also the role of your digital investment. So based on the data, what we're seeing is less than 20% of respondents want to use the office for focused solo work. but more than 80% want to come in for in-person camaraderie, collaboration, having fun, and team building. So the office's role is not dead, but it's shifted from a place to gatekeep and make sure people are working, and more of a place for collaboration and fostering that connection that so many of us have been craving over the last 15 months.
Sheila, what's the difference when it comes to demographics, whether it's women, whether it's minorities? Are there differences?
There are. So what we have seen over the last 15 months is that sense of belonging for Black employees is actually stronger working remotely versus working in the office. But at this point in time, based on our research, we're also seeing they have less satisfaction with their relationships at work. They're less likely to believe that they're treated fairly at work, and they're more likely to believe that they need to justify that they're working to their manager. So flexible work is not just about where and when, it's also about reskilling your managers to move from gatekeepers to more empathetic coaches and training them for inclusive management, which is different from how I was trained early in my career.
All right, so how does all of this maybe apply at Slack, or how does the data compare to what's actually going on at Slack?
So it's not markedly different, but what we've been doing over the last 15 months is treating a lot of the practices and policies as experiments. So we have found that this new way of working is actually better and our employees want it. And what's been great to see is how it's expanded our talent pool, which is very important in this war for talent. So 29% of our hires are now remote, and half of those hires are underrepresented minorities. Additionally, at Slack, we've set some guardrails, so our C-suite is now distributed, and we've also told our leaders that we don't want them coming into the office 5 days a week. So we set the guardrails so they can set the example from the top, so other people don't feel the pressure to come into the office 5 days a week. So we've been trying out all of these different best practices, and as the Future Forum, speaking to executives, using our research to develop a blueprint for a new way of working with the full understanding this is not one size fits all,
right?
But there are practices that leaders can adopt and experiment with as they design their post-pandemic workplaces.
Yeah, it definitely feels like we're in a little bit of a kind of playing around in the sandbox a little bit with some of this. Sheila, great to check in with you and really appreciate you revealing some of the work that you've done and the report that you've done. Give us an idea of what's on the minds of workers when it comes to how they work, when they work, and where they work, because it definitely feels like it's changing. Subramanian, she is Sheila Subramanian. She is Future Forum Director at Slack, joining us on the phone from San Francisco. Coming up, another treat for you. The author of a new book. It's called Glory Days, The Summer of 1984 and the 90 Days That Changed Sports and Culture Forever. John Wertheim, he's going to join us. You're listening to Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Already know it. This is going to be a great summer read. Great spring read, actually, but we're just a few days from summer, so I'm going to call it a great summer read. It is called The Glory Days, Why You Need to Understand the Summer of 1984 and the 90 Days That Changed Sports and Culture Forever. It's a book by John Wertheim. Delighted to have him back. He's going to join us in just a moment. First up, though, let's get to some of the news after the close. Once again, here's Doug Krisner.
When does summer begin? Is there a solstice this week?
There is, actually. I think there's a, isn't it? It's coming.
21st, maybe?
Something like that, yeah. Yeah.
Let me tell you what happened after the bell. We heard from Oracle. The company reported an 8% increase in quarterly revenue, and Oracle also pointed to accelerating growth rates of both its applications and its infrastructure cloud business. But curiously, the stock is down in the late session by 2.5%. Today, during the regular session, we had a move up in American Express. The company reported card member loans in the month of May jumped 5% from April, and delinquency rates fell to the lowest level since Bloomberg began tracking the data back in December 2008. Heavily traded today, shares in Freeport-McMoRan, the stock was down about 4.8% today. Copper prices sinking to their lowest level in nearly 2 months. Now, generally speaking, insofar as the overall equity trade is concerned, we were cautious as the Fed kicks off its two-day policy meeting. And then on top of that, the day's economic news kind of underscored the challenges of the American recovery. Retail sales dropping 1.3%. Producer prices in the month of May up more than expected. So we had the S&P and the NASDAQ each down from record highs, with the S&P falling 0.2%, NASDAQ comp lower by 0.7%, and the Dow Industrial Average off about 0.3% today. Not a lot of movement in the bond market, though, Carol. 10-year Treasury.
You think there'd be a Fed meeting or something coming up?
Yeah, maybe. So I'm cautious about that.
Yeah.
1.49% on the 10-year.
Summer solstice, June 21st, coming up. All right, Doug Krisner, thank you so much. This is Bloomberg. Yes, indeed. Glory days. It was the time of Bruce Springsteen and Born in the USA, Indiana Jones, The Temple of Doom, The Natural, The Karate Kid, Purple Rain, and so much more. It was 1984, those glory days, and that is the title of a new book by John Wertheim, Glory Days, the Summer of 1984, and the 90 Days That Changed Sports and Culture Forever. John, of course, executive editor, senior writer for Sports Illustrated, continuing correspondent for CBS 60 Minutes, and I like to call him a friend of the show. He's got that new book out, and we're delighted to have him on to talk about it. John joins us on the phone in New York City. Congratulations.
Thanks, friend of the show.
You are.
Praise. I love it. Thank you.
You are a friend of our whole team. John, talk to us about this book. Take us back to 1984. You were a young kid then.
I was a young kid then, but the tryouts for the 1984 Olympics team were held in my small town in Indiana, and I wrote a piece about it and sort of developed this piece into the book, and it sort of struck me that. I use Michael Jordan as sort of the symbolic figure who, at the beginning of the summer, was this sort of sheepish college kid whose coach was making him go to the NBA. Michael Jordan would rather have stayed in college. And by the end of the summer, Michael Jordan was a millionaire many times over. He had an Olympic medal. He had a signature shoe. And it struck me that pretty much mirrored the arc of sports that summer, that it started in one place, and in a very short amount of time, it sort of had blossomed into the big business, big media property that it is today. That a lot happened in that summer, and a lot happened in a very short amount of time.
Well, we've had some fun talking about it in the newsroom. Go through some of the things, because they're things that we in the sports world, to some extent, right, John, take for granted today. But as you said, that summer was pivotal for something like an ESPN.
Yeah, exactly. I mean, some of this was just, the Michael Jordan. One of my favorites is the NBA got a new commissioner, a guy named David Stern, the lawyer who made people who worked with him miserable and had all sorts of ideas about media and globalization. So David Stern is on the job for a few months, and he gets his first NBA final, and it's Magic and the Lakers against Larry Bird and the Celtics. So we get this dream NBA finals. It goes 7 games. It's on network TV, which wasn't always a given. for the NBA. And then a few days later, he presides over his first draft when Michael Jordan gets selected. So that's a pretty good week for David Stern. And then you just sort of go down the list, and it's, Wayne Gretzky won his first Stanley Cup, and there was an Olympics that was profitable, and, Donald Trump entered the scene through sports, buying a football team. But so you had all these coincidences. But I think what really became clear to me when I did the reporting is two things. This was the summer. I mean, you mentioned ESPN. This was the summer of cable. And cable really turned a corner, whether it was MTV or whether it was CNN or whether ESPN was sold to ABC that summer. And smart people at ESPN realized, wait a second, we shouldn't be paying the cable systems to get on their offering of channels. They should be paying us a subscriber fee. And the cable, it was a game of chicken. And basically, ESPN wasn't the one that blinked. And so the subscriber fee that started out as a few pennies and would then grow to about $7 a month, that's really the secret sauce behind ESPN's success. They sell their 30-second commercial blocks, but they make most of their money from these subscriber fees. And the other thing that happened that summer, and again, I think Michael Jordan was kind of the exemplar, athletes recognized their platform and their value. And it wasn't really political. This was sort of Reagan 80s. This was not about activism and then social and political activism, but athletes realized, wait a second, I shouldn't be doing that for free. Or wait a second, if Nike wants to give me a shoe, they should be paying me too. And I think that Michael Jordan doesn't get enough credit for that. He's not a political activist. He's not, Muhammad Ali or Bill Russell or Colin Kaepernick, but what he did to empower athletes starting in that summer of 1984, I think he doesn't get enough credit for that.
Well, there's a line in your introduction. You said most of Bloomington looked at Michael Jordan somewhat indifferently in the summer of 1984 as he ordered a smoothie at the Chocolate Mousse ice cream joint or lost 18 holes of putt-putt only to shoot the winner, a scalding stare, and demand an immediate rematch. But it's just interesting that, right, someone incredibly unknown and then almost in the snap of a fingers was a game changer, a lasting one in terms of sports overall, certainly, when it comes to basketball, but even more broadly. And just got about 40 seconds, then we'll come back and talk more.
Yeah, I mean, Michael Jordan was running around my hometown, and it wasn't a big deal. He didn't have an entourage. He didn't have security. He didn't have an agent. Some of that is cute and nostalgic, and, sports were so much more pure back then. But part of that is athletes were really undervalued. And the notion that Michael Jordan was sort of at the mercy of these coaches and didn't have an entourage, I think says something in itself.
Well, and I know it's something you and we've talked around on this air before. Certainly it's something that women have increasingly stepped up to, and I know we've talked about that. John, sit tight for a second. Got to do a little bit of news, but I want to come back and talk a little bit more about that summer, those glory days, and I really just want to get an idea of specifically David Stern, because it sounds like he had a big role or at least influence for you when you were writing this. We're talking with John Wertheim. His new book out, it's Glory Days, the summer of 1984 and the 90 days that changed sports and culture forever. We'll get back to John in just a moment. In the meantime, let's get a check on world and national news. Nancy Lyons in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. The U.S. death toll from COVID-19 today topped 600,000. That's according to Johns Hopkins University. The number of lives lost is greater than the population of Baltimore or Milwaukee, and it's about equal to the number of Americans who died of cancer in 2019. President Biden is in Geneva for a high-pressure meeting tomorrow with Russian President Vladimir Putin. He spent the past few days at a series of confidence-building meetings with U.S. allies. Today, he met with leaders of the European Union and spoke of their bonds.
Europe is our natural partner. And the reason is we're committed to the same democratic norms and institutions. And they are increasingly under attack.
Biden has also consulted with leaders of the G7 and NATO ahead of his meeting with Putin. Attorney General Merrick Garland says the domestic terrorism threat is rapidly evolving, but he says the focus is on the violence, not the ideology.
In America, espousing a hateful ideology is not unlawful. We do not investigate individuals for their First Amendment-protected activities.
Garland says the administration intends to address the root causes of racism. The White House says it is not setting a deadline, but will review bipartisan efforts on infrastructure in a week to 10 days. A group of 5 Republican and 5 Democratic senators is still working on a package, but they have yet to release details or a way to fund it. If a bipartisan deal cannot be reached, then Democrats are expected to pursue a Democrat-only reconciliation option. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Right, Nance, thank you so much. Carol Massar, along with Doug Krisner, host of Bloomberg Daybreak Asia. There's a few stories, Doug, when it comes to the housing market, and one among the most read on the Bloomberg has to do with the world's bubbliest housing market and how it's starting to look fatigued. And it talks about specifically Canadian home sales dropping for a second straight month. I think there's another story, too, on the terminal, though, that talks more broadly about kind of what we're seeing when it comes to real estate.
You know, it's interesting. We've been talking a lot about the work from home environment, this remote work thing that's happening. And it's fueled an unprecedented boom for vacation homes. Did you see this across the U.S.? The National Association of Realtors today saying that sales of these vacation home type properties up 16% in 2020. That is nearly 3 times the gain for all existing home sales. Now, we know where interest rates are, right? Oh, absolutely.
Yeah.
So you got to wonder whether we've got this Fed meeting happening right now. Is the Fed concerned about this? Do we have a bubble developing in the real estate market? And have we been here before?
Right. Well, it's different, though. It's a case of lack of supply. You can't just all of a sudden, snap your fingers and you've got 1 million more homes out there, right? It takes time to build them. So there's dislocation in that. And as prices go up, people are going to either back off and not buy. I mean, right? Or if rates start to go up, that will certainly have an impact.
Is it temporary? That's the question. And we know the pandemic has created this big structural shift, moving people out of urban areas into kind of suburban or more residential type communities.
Right.
That's a factor too. And I don't know whether you saw the move in lumber yesterday. We were down about 40% in the session. So yeah, maybe this is a leading indicator, at least where new home construction is concerned, that we could be seeing a bit of a softening.
The other story I found that was about real estate prices around the world are flashing the kind of bubble warnings that have been seen since the run-up to the 2008 financial crisis. According to Bloomberg Economics, New Zealand, Canada, and Sweden rank as the world's frothiest housing markets based on some key indicators used in our dashboard. So specifically, UK and US are also near the top of the risk rankings. But again, I feel like this market might correct, Doug.
Yeah, maybe. New Zealand, yeah, we talk a lot about on the show. Yeah, that's got really interesting.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We're keeping an eye on Oracle after the bell. The company reported an 8% increase in quarterly revenue, but apparently the whisper number, remember the whisper number? Well, apparently the whisper number here on cloud sales missed, and so the stock is down about 2.5% in late trading. Oh, by the way, going forward, Oracle is seeing accelerating growth rates for both its applications and its infrastructure cloud business. American Express shares were higher today by 1.5% in the regular session. The card member, or the company saying that card member loans in May were up about 5% from levels seen in April. And the delinquency rate falling to its lowest level since Bloomberg began tracking these data back in December 2009. Freeport-McMoRan's second most heavily traded stock today. The shares were down about 4.8%, coincidental with a move lower in the price of copper. Copper prices sinking to the lowest level in nearly 2 months. Now, in terms of equity price action, we were lower today. The economic news on the session kind of illustrates the challenges for the economy. We had retail sales falling 1.3% and producer prices up more than forecast in May. Bear in mind, too, we've got this Fed meeting, special coverage tomorrow afternoon, 2 p.m. Wall Street time here on Bloomberg Radio. So the S&P and the NASDAQ each down from record highs, with the S&P weaker by 0.2%. NASDAQ comp down 0.7%. The Dow falls 0.3%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thanks so much. I want to get back to John Wertheim, executive editor, senior writer of Sports Illustrated, contributing correspondent for 60 Minutes. He's got a new book out, Glory Days, the Summer of 1984 and the 90 Days That Changed Sports and Culture Forever. So David Stern, former NBA commissioner, is in the book. Was he a big influence? It seemed like it.
Yeah, both on me and the book, and also on all these trends that we've been talking about. He was wonderful, and obviously it's a pity he passed away a bit more than a year ago.
Right.
But he was great. I mean, 1984 was literally when he took over this commissionership, and he had a lot of ideas, and people thought he was crazy. He talked about how pretty soon we were going to move out of a world of network TV, and we'd be able to watch sports on all these cable networks, and no one quite knew what to make of it. And he said, all you need is a ball and a hoop for the sport. Why can't we export this? Why can't they follow the NBA globally? Why are we thinking of ourselves as just an American league? Why are we trying to internationalize this? And that, of course, is at the core of the NBA strategy today. He saw a lot. He saw around a lot of these corners in 1984, and he was great. I mean, he sort of, when I told him about the book, he didn't quite get it. And then he's like, the more I think about it, like, oh, yeah, an awful lot happened then. And the fact that he sort of had this role, I mean, he wasn't particularly well known when he took over the job, and the NBA wasn't particularly popular. And again, you can sort of chart the NBA's growth starting in 1984. That's a record any executive would be proud of.
You talk about David Stern kind of projecting kind of where things were going and forecasting where things were going. You also talk about, and we, today take technology for granted in everything we do, but you go back to the LA Olympics, again, 1984. I had family members who went there, and technology was really having its impact on the Olympics as well, the 1984 Olympics.
Yeah, I mean, 1984 also was the year that you had this cube-like, it looked like a food processor, and it was a computer, and they called it the Mac, and everyone sort of tried to figure out if computers finally were here to stay. They had, a personal computer was something I only use at the office. So it was sort of the summer of Mac, but also, you're right, at the 84 Olympics, they really sort of redefined what it meant to be an Olympic sponsor. And Peter Ueberroth ran this very successful Olympics. And one thing he did, he had these technology firms. So it was both AT&T and IBM, and they had something called the EMS, the Electronic Messaging Service. And they told the athletes, you don't need to pick up a phone. You could send a message to someone electronically if you put in your password and get on one of our, get on one of our monitors, get on one of our computer terminals. You can send messages electronically, and very few athletes took advantage of it. But you look back, and it was one of the very first email networks, and they basically demoed it at the 1984 Olympics.
Motorola distributing pagers, like that takes us back, right? Hey, listen, We'd be remiss if we didn't ask you about tennis. I know it's something you write so eloquently about, you are passionate about. The U.S. Open is coming up. What are your expectations? It's going to be back, right?
Will?
Or will it?
Not with it. No, I think so. I mean, honestly, I think so. I mean,
Okay.
if they're, we're packing Madison Square Garden, I think we'll be okay for an outdoor tennis event. I mean, I think we talked about this last year. I mean, the interesting part of this is, part of it is the fan experience. And again, I mean, I think especially since we're outdoors, we'll be okay. I think the really interesting thing is going to be, are companies ready to use the U.S. Open for hospitality, which is a huge source of revenue, and it's a huge part of the U.S. Open experience for a lot of firms. Are we at a point where, the fans will be in the stands and the fans will be on the grounds, but are we at a point where these companies that historically have rented these suites and used the tennis as entertainment, are they going to be ready to take clients back to suites? Is it appropriate, both health standards and also sort of optics? And, I hope the answer is yes. I think the answer is yes, but I just got back, whenever today, a few days ago from the French Open.
Right.
And there was very little hospitality.
Really?
Part of that was protocol. Part of that was Western Europe, they are not where we are in terms of getting out of this thing.
Right.
But I also think some firms said, you know what, I'm not sure it's a great look after what we've been through the last 16 months. I'm not sure it's a great look to have everybody, eating canapes and drinking champagne in this sealed suite. But I think that's the question. I mean, the U.S. Open, it'll happen. It won't be like last year.
Yeah.
We'll all get to go as fans if we want to, but I think it'll be interesting to see how many of these suites get sold.
Naomi Osaka, she withdrew from the French Open, and she talked about reasons related to mental health. You've covered the sport. You've covered a lot of athletes. She's not the first one, to talk about either depression or anxiety. There's a lot of stress and pressure on these athletes. And she even talked about, how hard it is to speak to the media. It makes her nervous. What are your thoughts on that?
I mean, I think, you say she's not the first, and you're right. I do think it was sort of significant that an athlete at the peak of her powers. I mean, she's highest paid female athlete. She's won the last two majors she entered. I mean, she's really sort of this is peak Naomi point, and for her to sort of have this sort of revelation at this stage, I thought it was courageous. I also thought it was sort of culturally fascinating. I mean, this is not the way athletes behaved or characterized their conditions 20 years ago when I started covering sports. I do think if you're in tennis, you knew that she's had these challenges. She's talked about it. She's pretty upfront about it. I thought it was really, at best, tone deaf, and at worst, something more malicious even, that the tournaments responded the way they did. This was not about an athlete that was trying to pay her way out of something that was inconvenient. This was not about an athlete who was grandstanding or being self-righteous. This wasn't, defiance. This was a broken human being.
Right.
And I thought I mean, she probably could have handled this better, but I think really more of the blame rests on the adults who were not very sensitive or empathetic or read the room particularly well, and sort of cast her as this rebellious troublemaker, and that wasn't what it was at all.
John, thank you so much. Always love hearing from you. Wish you good luck with this book, and look forward to talking with you. And I got to say, I got to love just looking at the pictures, from Larry Bird to Bob Knight to I was a gymnast, Mary Lou Retton. So that really kind of stands out for me. Martina Navratilova. It was a remarkable summer. So good luck with the book, and look forward to catching up with you again soon. John Wertheim, check out his new book, Glory Days, the Summer of '84 and the 90 Days That Changed Sports and Culture Forever. Coming up next, John, we have Doug Matthew joining us. Joe Matthew, sorry. I'm like looking at the book and forgetting where I am. Tell us what's coming up on Sound On.
Well, I'll tell you what, it's deal or no deal today in politics. The deal is this truce between the U.S. and the EU involving subsidies to the two big airplane makers. No deal on infrastructure, though. We'll tackle it all next.